Well, as the U.S. economy is improving, the Fed decided to start tapering. It's not monetary tightening. It means only they're buying every month a little bit less of government bonds. And after 5 years of zero policy rates, quantitative easing number 1, number 2, this time number 3, it's time to start gradually exiting the purchase of bonds. That's going to take the entire year. Then the Fed is going to probably keep interest rates at 0 for another 6 months until the middle of next year. And once they start increasing interest rates from 0 to something more normal, 4% is going to take them 3 or 4 years until they do it. So that's a very slow, very gradual, very cautious exit from unconventional monetary policy, something that will be justified if the US economy recovers the way it's recovering now. Well, in the case of growth, the good news is that instead of a recession that the Eurozone had for the last couple of years, this year is going to be a year of positive growth. The bad news is the growth is going to be anemic, subpar, below trend, uneven, with stronger growth in parts of the core like Germany, but still very mediocre growth, even below 1% in Italy, in Spain, Portugal, Greece, Ireland, the countries that had pressures on their markets. For inflation in the Eurozone, the target of the ECB is 2%. Their forecast for this year was 1.1%, but the latest number suggests a number of 0.7. I think that the risk of outright deflation in the Eurozone is still low because there is deflation in some periphery countries, but not in the core. But even avoiding deflation but having an inflation rate well below the target of the central bank is dangerous. It can slow down demand. It's a signal that the economy is weak, that there is not enough generation of jobs. So in some sense, this low inflation is a symptom of how weak, fragile, uneven is the recovery of the Eurozone. Well, gold reached a peak a couple of years ago of about 1,900 per ounce. Last year it fell all the way to 1,200. It has recovered towards 1,300 in the last few weeks, in part because whenever there are geopolitical noises like Ukraine, of course the fear factor drives the gold prices higher. My prediction was that gold prices could reach $1,000 by sometime in 2015. I'm still of the view that the factors that can push gold prices lower are stronger than those that are going to push it higher. Why? Interest rates, however, gradually are going to be raised. That's a negative for gold. The risk of another financial meltdown globally is reduced because of reduced tail risk in Eurozone, US, and in China. Even geopolitical risk like a war between Israel and Iran is lower. Yes, Ukraine is noisy, but it's not going to escalate, hopefully. And the value of the dollar over time gradually can go higher. Usually there is a negative relation between the dollar price of commodities, including gold, and the value of the dollar. And while the central bank has been printing money, that has not caused the inflation because there is still slack. Well, both countries are small, so the risk of having a global contagion impact on global financial market is limited because hopefully things will improve policy and politically, but none of them is large enough to have a global systemic effect the way a hard landing of China would. Of course, additional political and social noise in either one can affect oil prices or gas prices or markets for a few days or weeks. In the case of Ukraine, they don't produce gas. They import gas from Russia, and that the gas goes also to Western Europe. Even during the peak of the Cold War, when relations were more tense between the Soviet Union and Germany in Europe, there was no cutoff of gas supplies. So even if things were becoming more difficult in Ukraine, and I don't think they will, hopefully the flow of gas from Russia to Europe is going to continue, because if Russia were to cut off those supplies, it's going to shoot itself in the foot, because a lot of its revenue come from exporting gas and oil. So I don't see risk. Venezuela is a country that is an important oil producer, but because of their own mismanagement, the production of oil has fallen over time, even if the reserves are very large. Short of a total meltdown and collapse of production, I don't think Venezuela will have an impact on global oil prices, even if, of course, the domestic situation economically is becoming even more fragile and the political unrest is becoming even greater.